Hello guys, today we are going to look at one of the stock called FINPIPE. They are the pipe manufacturer. So we are in the quarterly chart and what we can see is that there was a bullish momentum, then there was a doji candle and then price was stepping down and it started forming a wick at a lower portion which is on a quarterly. Now the movement is still bullish. It has not broken any supply zone on a quarterly and it will going to take some time. Now let's look into the monthly chart. What we can see is that after this down move in the current month, it is a bit bullish. So if we need to mark the monthly zone like this, so our marking will be considering this is an exciting candle, which is a leg in, and then there are three base, and then one leg out, and then base, and then there's a fall. Now this area itself is a bit powerful, not because it is having a good structure, but it is also because that it was able to stop this significant down move towards the downside, and now currently forming as a green exciting base candle, which is within the range of this area. Now let's look into the weekly chart and understand how the price has been trading. So what we can see is that there was a clear uptrend where price was making higher high, higher low, and then price was trying to go up. And this is the area which is on 29th of October, which created a strong selling pressure, which continued for up to 21st, 28th of January. Now what we can see that price is reacting from this bottom area, which has a drop of 1, 2, 3, 4, 4 bases, and followed by the up move. Now, if you need to mark the weekly zone, which is not so great here, we'll be marking something like this, or we can also mark at the bottom area, which is this candle here. And we'll just adjust the monthly line a bit so it is more proper. So what we are seeing here is that price came down, reacted from here, and then going up. So this weekly candle is still active. So this is still live candle. We have another one day tomorrow to close this week. So whenever we see this kind of a candle is forming is there, we can also expect the price to go up because it is almost nullifying more than 50% of the entire range. Now coming to the daily chart, what we can see here is that, and this is the same area what we marked. This is kind of a swing point also, which is the origin of the move. For this complete move, this is the origin. So these are the areas which are powerful. Now let's look into the current price action. So this was the monthly top level where price once reacted and went up, and again it came back to test this level. So if you see, there was another level here which is a drop base rally, which also have a gap. Price came here, but it was not able to close and or give a significant move, which could be a decent risk and reward, because price was waiting for this area to touch, which is the bottom portion. Now what we are seeing here is that from this area price has already moved upwards for one day, and for another day it was like a base candle, and again it is kind of a inside candle. So what happens in case of inside candle is the indecision making. The good part about this candle is that the previous close was red, but current close is green. And what we can also see is that this is the gap area which is also filled. So what is the expectation here? Because it is running from a significant monthly area, which was also the origin of the price, which moved to the highest level and then coming down. So this could be an opportunity for us to trade long here. So how we should be trading here is that we'll go to the 125-minute time frame and then look for opportunity. So let me change to 125-minute. Now, if you see in 125-minute, this structure, what we have is that the price was stepping down gradually, then it broke downwards and it created a gap. And this gap is yet to be filled. And what we can also see is that there is a strong bullish momentum with a gap also. So price was able to close at 167, and then next day it opened up with a exciting candle and the move continued. Even in the current period also, if you see for the second pip, there is still a gap there which is not yet filled. So price closed here opened here and then became a bearish candle. And what we can also see is that price is trying to go up, and also there are indecision which is supporting the price to stay in a level. So there could be two probabilities here. One probability will be there. We will have a break above this area, make the gap fill, and then it may again revert back. Now the interesting thing, if you understand the demand supply based on the videos what we have discussed so far, all these areas are kind of a garbage area. They are not so significant. Other than this portion, which is a rally base, and there's a drop. So we'll consider as a drop because the close was here and the open was here. So this is one of the area which is more powerful. So there are orders here which may stop the price to go up significantly. But prominently this area which is marked here is having more strength in terms of stopping the price. Reason being that this is one of the area which is having a good structure, rally based drop. However, the important thing what we have to understand is that we have a higher time frame confluence. So when price is running from monthly or weekly after a good reaction, this kind of a supply zones are not so great. They do not work because these are the supply and the demand zones are high weighted because of the higher time frame. A smaller time frame does not work, but this is one of the area which can hold the price. The second option what we have is that we have this bottom area, which is also a demand zone. So if you see, this is the area which has enabled the price to close above this portion, which is the uh, previous doji candle. So somewhere there are potentials here where the price could give us a good move. So there are two kind of trade what we can plan here, and we are going to play both of them. First is that we are going to take a 125-minute trade here. Our entry point will be above this week, which is around remaining 25%. Why we are keeping it here? Because this is the area which will be almost aligning to this red zone, red candles body, as well as this wick area. And our stop loss will be what near the neck of this candle. Why we are keeping it here? Because sometimes what happens is that price comes back, retest, because this is still a open gap which is not filled, comes back, retest and goes up. Okay, so what we can also do is that we can have some buffer here in case price want to go a bit deep. So the price need to face a resistance here, which is this swing point, the bottom of this red candle. If price was able to break below this, it is definitely can come here. So this is one of the trade what we can plan, and as I mentioned that price is running from a higher time frame and it is one of the good areas. So what we may expect here is that we may expect price to halt something here, which is anyway it is 1 is to uh, 1.2 risk reward trade, and the next target for us will be somewhere this high area. Why this high area? Because if you see on a higher time frame, this is forming kind of a base candle here. So let's look into the daily. We are at 200 208. So if I drag it around 208, which is here, we see this is a swing point kind of a structure where there are a lot of base candle, but this is the area which has enabled the price close below this low as well as this low. So this becomes an important area for us. So if we go to 125 again, and we see this structure, this is one of the trade what we can plan that will easily give you 3:1 risk reward ratio. The only thing what we'll have a challenge here is that one of the area here where price may halt or it may try to come down also a bit. So this is one trade what we can plan. The second trade, which is more of a better trade, is that to have a entry point here at this base candle here. So rally, base, rally, and then have the stop loss here. Why we are not keeping the stop loss here at below this candle? Because whenever we see a significant downfall followed by a up move, price usually comes back to the origin point. So again, they find a buyer, and this is also open area, correct? This is a gap which may also get filled because this area may work sometime, may not work. So to be on a safer side, what we can have is that we can have the stop loss somewhere here. That way, what happens is that we take a support of weekly demand zone also. This is also kind of a drop base rally, then a rally base rally. So reversal structures are more powerful. So we can always plan it like this. Or to be more conservative, you can have a entry at the gap, stop loss here. But there are chances that you will miss out trade because price may come and react from this portion only. So to avoid that miss, and we are talking about only 8.6 rupees, so that is approx 9 rupees. So that should not be too significant of a risk. But our target here will be always 208 because this is the area where we can see some price reaction, and again we could expect stoppage of price here. Now, if you put the first area where we are expecting there could be some resistance, anyway, you're getting 2 is to 1 risk reward ratio, but I'll prefer to have it here and hold it for a long period of time. So once I get 1 is to 1, I usually move my cost stop loss to my break even point. So that way I do not lose out on capital, and wherever the trades are unprofitable, I can enjoy for a longer period. So whenever I get a swing portion, I usually trail my stop loss there, and that way, what happens is that I get to enjoy the rally, and in between, I keep booking partial profit. So that way, what happens is that you are not disappointed in case price comes back and takes you out at a B. So this is the analysis what we have for FinPipe. Let me know your thought about this analysis. And in case you are interested to have any stock reviewed by us, do comment on the comment section. That's all for the day. Have a good rest of the day. Thank you.